Hello guys, today is going to be a daily review on the 4th of March 2026. Obviously now it's the next morning, obviously it's the next day. I was a bit busy yesterday so I couldn't get a review done yesterday, but I did kind of want to do the review today because people had a lot of questions about the draw on liquidity, high resistance liquidity runs, low resistance liquidity runs, waiting for certain runs to play out, and when you should not be engaging in price and when you should be engaging in price. So let's start with the hourly chart. So on the hourly, actually let's go to the daily first. On the daily, we're in a very consolidated range. We took out the 17th of February's daily low and then returned back into the range, back towards these relatively equal highs here. So on the daily chart, we're in a very large consolidation. We're in a range which is not permitting price to leave. So we're not leaving out of the existing range. So it's a very consolidating market. Intra-open yesterday, it was around this time here, the 8 a.m. and 9 a.m. candle. So I had buy side above this high. Obviously these are relatively equal highs up here. So there's a lot of stops above here. And then the remaining of the inefficiencies here. So I had buy side above that. Sell side, we have constantly run out. So you can see constantly within this run higher here, old lows have been swept, failing to close beneath, and we return back into the range. Every bullish fair value gap since this low was formed has supported price higher on a hourly basis. Considering we get a breakaway gap in here, so you can see between this candle high, this candle low, that's the first signature of a potential low resistance or a run towards the opposing side. So when we get a breakaway gap like this, that's indicating that a run above old highs are likely until order flow obviously switches. So in here we trade above this short-term high, fail to close above it, return back to a short-term discount into this fair value gap. We fail to get under 50% of it, meaning this is an institutional order flow entry drill. The market is leaving some of this inefficiency open and rebalancing within an efficiency. So when we're leaving some inefficiency open, that is the strongest testament that we are going to continue in the direction where the market is moving. So for example, in this case, bullish. So intra open, I was watching at high and these down closed candles. That's basically all I had on my chart. These down closed candles here, because when bullish, any down closed candles, you want to see support price higher. And then I did have this inefficiency, not drawn all the way across my chart, but like this. I wasn't looking for it to be used as bearish fair value gap because our bias was bullish in here. So now go onto a lower time frame, so a 15-minute chart. Let me just put these here. So if we go onto a 15-minute chart here, you can see at open we have this buy side here. You can see order flow is clearly bullish from this high to this low. Then once this low is formed, you can clearly see order flow is bullish. We create a swing low, create a swing high, return into discount, bullish order block, fair value gap, sweep this candle low and then expand. So now we get a new dealing range from high to low, new high, return into a short-term discount into the hourly inefficiency, leaving gaps on a 15-minute chart open, right? And then we displace higher just before market. So we displace higher just before market open. So we create a new high, low, higher high. So then this range should act as a breaker if bullish. We've got a bearish order block, we've got a bullish fair value gap. So I would want that range to support price higher. So that's what I'm looking for price to hold, and that's the breaker range, right? So going down onto a 5-minute chart towards open, you can see that range with a bit more detail, where we have a high, low, higher high, and then into open, we're trading down into this 5-minute fair value gap, right? Leaving lower fair value gaps here as breakaway gaps. So we're returning into a short-term discount of this low to this high in here, while sweeping sell side. Sell side is swept here, sell side is swept in here, sell side is swept one more time. You can see the body's failing to close under it. So we're still bullish. We got buy side above here, which I'm targeting. So this is what gave me a bullish bias. This is what gave me bullish order flow. We're not displacing lower. If we were going to go lower, we would have done it while taking the 930 low here. At 945, we traded lower, failed to close under it and return back into the range. So on a 3-minute here, you can see the range we were in. We're in very high resistance conditions. And within the stream, I was basically staying on a 5 and 3-minute chart the whole time within this range. While we were confined within this range, I was staying on a 5 and 3-minute chart because if we're trading to this high, my range of opportunity is above this short-term high and through that range if we are going to displace, and that still gives 130 points. So So when we started sweeping this low into these discount arrays, we traded it back above the range. At this point here, you can see we didn't close above the range. So we didn't close above the range there. So we create a new range from range low to range high, return into a short-term discount, right, of that new dealing range. And then at 10:05 on a 5-minute chart, we close over this 5-minute high. So let's look at it on a 5-minute. At 10:05, we close over this 5-minute high. Within this whole range, look how no candle closes above a previous 5-minute candle high. It's all just wicks until here, until the bodies are telling the story that we're leaving this range. We're leaving the dealing range here of this high resistance conditions to a potential low resistance spooling or price. So, as we close that high, I mentioned that I would want to see if we get an immediate rebalance to this candle high. Once this candle opens, we trade into it. If you measure this wick in here, we fail to get to midpoint, which shows bullish price action. And on a 3-minute chart, you can see every single down close candle once traded above is supporting price higher, albeit in a high resistance condition until this high. So when we close above that high, we trade down into this down close candle, into this small little fair value gap here, and then trade higher and have a low resistance spooling or price there. So before I get into my entry, I just do want to put a bit of significance onto this. On a 15-minute chart, let me just get up. Before I get to my entry, I want to put a bit of significance onto a 50-minute chart here. So if we look at the difference between NASDAQ, ES, and YM within here, you can see how NASDAQ failed to make a lower low, so did ES, and YM made a lower low. So there's a bullish S&T between NASDAQ, ES, YM. I don't use SMT to get into trade. Like, I will not be I don't need to see SMT. I don't need to see an SMT form at the lows in order to get into a trade. But it means we're likely to see longs be favourable on NASDAQ and shorts favourable on YM. ES is the middle asset in this case, where it is stronger than YM but weaker than NASDAQ, as we're closing under these inefficiencies, right? So longs are favourable on NASDAQ. So with S&T at them lows, let's go on to a 1-minute. I'm gonna put it onto this chart where I've already got all annotations I was looking at on the day. So once we closed above that high on a 5-minute chart, you can see we swept into this inefficiency here. So we swept a low inside of this 1-minute inefficiency, trading into that 3-minute fair value gap and the 3-minute down close candles. So at that point there, when we sweep that low, I'm monitoring order flow on a lower time frame. I'm monitoring whether we are respecting discount arrays and continue closing above premium arrays and expanding towards buy side. So if we drop to a 15-second chart in here, once this low was taken, you can see as soon as this low has been purged, as soon as this low has been taken inside of these inefficiencies and on a 1-minute and with high time frame PD arrays, bullish fair value gaps start supporting price higher. So every single buy side imbalance, sell side inefficiency supports price higher until our target is reached on a 15-second chart. Once we're in a low resistance liquidity run, now look at every single down close candle within that run, which is a bullish order block. Notice how they all support price higher when bullish, once closed above, all the way up until buy side, right? So this is an example of a low resistance run where when bullish, every down close candle is supporting price higher. Every fair value gap is supporting price higher. Every inversion fair value gap is supporting price higher. Every single discount PD array is supporting price higher, and we're closing quickly above any premium PD array. That is characteristic of a low resistance liquidity run. Whereas, if you're looking at this range on a 1-minute chart here, within that range, on a 5-minute chart, which I said I was waiting for us to close outside of it, you can see how every single fair value gap that is being created is getting closed through quickly. We're retrading every single fair value gap. We're not respecting opposing candles. We're just gyrating in a range. That is the biggest characteristic of a high resistance liquidity run. So if you were trading in this condition, like I have a good video on my channel called why most trader struggled today. That explains these conditions a lot. But this is an example of a high resistance liquidity run, and this is an example of a low resistance liquidity run. If you master that and not an entry model, trading will be so much easier than what it is currently for you. So if you have any questions about this whole price delivery, then just put them in chat, because I know this is a bit of a short review and I probably forgot some of the stuff I mentioned in stream yesterday because it is the next day. I'm just going to show the entries. So these were the entries based on this run. So you can see I went long inside of these 15 seconds. So it's within this up close candle. Once we close above it, I'm going long there. So you can see I'm going long within there, which is on that area I just showed on a 15-second chart. This is a 1 minute, and then taking profit into that high. And then you can see that on a 3-minute chart where you trade into the opposing candles. It's a 1 minute liquidity sweep, and then the algorithm will spool to a low resistance delivery. So this is the execution I took today. This is on an AMP live account. And then this is just the summary of the live account. And if you're familiar with AMP live account, this is what it looks like in TradingView. So I've covered the account balance, the account number, and then there the P&Ls for the day. I hope this was insightful. Thank you for watching.